Well, in this edition of What's the Story, the company that we are focusing on is Borosil Renewables. This particular company, we'll speak a little bit about the company, but the main reason why this particular company is in focus is the kind of moves the stock price has seen. The stock price has gained over 4.5 times in just the last 1 year. It's up almost 6.5 times from the March lows, and the stock has given returns of 12 times in the last 5 years, thereby making the shareholders very happy. And remember, it also has renewed and sparked quite a bit of interest in the market and whether this particular rally can sustain. To talk a little bit about the company is the only solar glass manufacturer in India, does not have any competition. It actually started its journey by commissioning its solar glass manufacturing facility in Gujarat in 2010 and has since doubled the production capacity to 2.4 gigawatts per annum. The company is promoted by the Borosil Limited group, mainly known for specialty glass products. What is it that is working for the company? It has a very strong moat. It is the sole solar glass manufacturer in India. It also has, ensured that there is an anti-dumping duty on competition from China, and this proves to be a great impetus as far as the company is concerned. The company also recently raised funds via the QIP route to help double the capacity that it has so that it could cater to the increased demand as far as the domestic market is concerned. In terms of competition, as we mentioned earlier, no domestic competition prevalent, only imports, and the company needs to be able to compete with Chinese players. Remember, Chinese players are heavily subsidized in China and by the Chinese government. And also remember, the company caters to almost 40% of the total requirement of the country's solar glass energy needs. In terms of recent key developments, the government is looking at coming up with an anti-dumping duty to make the company competitive against very cheap Chinese imports. Also, remember, domestic demand as well as pricing trends are quite resilient in 2020. In fact, we understand that pricing is up by almost 60 to 70% in 2020. The company has also said in a recent analyst call, saying that it is working at close to total capacity utilization as demand trends continue to remain quite robust. In terms of imports and what is it that is driving the stock rally in the near term, Chinese glass producers are currently facing certain curbs. Remember, Chinese companies are faced with the problem of significant pollution control norms, and a lot of glass manufacturing companies are in areas that are facing tremendous pollution issues, so they are forced to close overnight. Also, given the fact that a lot of Chinese glass producers at this point of time are working at less than optimum capacity, given the fact that they have been forced to shut down or halt operations due to adhere to the pollution norms. The company said that pricing at this point of time is at discount to imports. However, what they're saying is that once the anti-dumping duty kicks in, they would be able to be at par with landed imports. Overall, very strong prospects, no competition, and given the fact that demand is something that is doing quite well, this particular stock is doing quite well as far as the equity markets are concerned.